All right, 30% goes to money management, and a whooping 60% goes to trading psychology. So it's the psychology a lot of person miss out. That is what make them to fail in the market. All right, people do not understand this, and it's not just about trading now. Let me put it that way. It's not just, it goes beyond trading. It's actually a function of life expectations. So if your psychology about life generally is wrong, trust me, you are already bound to fail. You're already bound to fail. So while we might be talking about trading entirely, this also applies to life situations. So your trading success, it's completely dependent on your trading psychology. So 10% to your knowledge, 30% to your money management. As time progresses, we'll also talk about money management with time. Okay, so now the thing is, according to this book, this is Forex Trading Secrets though, so you can maybe, I'll look for a way to drop the book on the Telegram channel for everyone to study, but I'll just look for a way to skim through everything. So the first thing is, most traders can spend years trying to find and develop the right system with the expectation that they will yield excellent results and make a lot of money for themselves. But however, very few dedicate as much time to dive deep into their own psychology as human beings or as a trader, thus neglecting the most important part of the Forex trading scene, which is the individual trader. So having a good system is good, coupled with sound money management and a disciplined trading plan is fundamental indeed, but it will not work completely unless the trader is able to understand all the psychological barriers that could affect the decision-making process and the reaction that stems from any positive or negative outcome of the the decisions made. Trading must include all these elements in a balanced way for the trader to succeed in the business. What is the first thought that comes to your mind when your trade has a negative outcome? That's sometimes people blame the system, like some of the signals we're getting on the Telegram group. I know most of them are going well, but once somebody loses a little money, I think somebody called me up, was complaining bitterly on the group. I dropped Euro USD sell, and the person complained she was losing money bitterly, and me, I'm on Euro USD sell and I'm in profit. And I asked her, what is the problem? What's your account size? She says her account size is $200. How much lot size are you trading? She's trading 0.2 on a $200 account. All right. Now I asked her. The market is doing. We entered the trade 2 days ago, meaning we already made like 150 pips before she came to join us. So the market was doing a little retracement, and with that retracement, our account is almost wiping away. And I asked her, why will you enter 0.2 on a $200 account? She said trading is gambling. That was her answer. So she doesn't mind losing the money. Now that is a very wrong mindset. All right. Now the trade is correct, but our attitude towards the trade is already wrong. Our psychology. She's seeing trading as gambling. So that is the first psychology those of us here in this call have to learn to first of all delete. You have to first of all delete that from your head. Trading is not gambling. Trading is a full-time business, and until you start looking at it as such, you'll be doing rubbish. So the first thing as well is what do we as Nigerians, for instance, see as a mistake? Okay, because of time, I will not want us to start answering that question right now. Okay, but mistakes are more like an everyday thing. All right, being wrong or making a mistake in our current society is seen as being bad and signals incompetence. Okay, we have been conditioned to strive and fight to always be right, but it's very, very wrong. You cannot always be right, and we begin to feel bad when we make mistakes in life, but that is wrong. Mistakes should be avenue to learn. Like I said, we're using a case study as traders. When you take a wrong trade, what comes to mind? Like somebody posted on his status on LinkedIn, and it's saying GU is a buy, and I commented GU is a sell, and person got angry. I said no, there's no need to be angry. Let's see the outcome of the trade, and the trade is selling currently. Okay, and now the person is like, instead of getting angry that you made a mistake, find out why you made the mistake. All right, just like I posted CHFJPY on the group, and somebody chatted me up and said CHFJPY is still a powerful buy. I say, well, my system tells me that it's now going to sell, and currently it's selling. Now the person buying, I believe the person will be in a loss now. Now, instead of you to be angry that you made a mistake, you should be finding out why you made the mistake. So once a mistake is made in life and also in trading, the first thing you should do is not to be angry. All right, so how do you handle a mistake? The first thing in handling a mistake is change your belief that mistakes is bad. Mistakes are not bad. All right, your belief will determine to a very extent your mental fitness. Your belief represents your attitudes in life towards anything that surrounds you. They also shape your emotions. So you agree or disagree that a certain point of view is right, independent of the fact. Whether you agree or disagree with a certain point of view, independent of the fact of the right or wrong of it, you must trust your view. But how many of your beliefs are really helping you to see the real picture, to change your belief system? You have to examine what lies at the root of your belief system, looking for evidence that sustains a different point of view, and investigate further. Begin to see every mistake as a learning experience. That's the solution now. Change your perspective, change your belief system. See every mistake as an avenue to start learning. All right, the person that was arguing with me that CHF JPY was a buy was looking at the chart from the 1 minute time frame, while I, on the other hand, was looking at it from the daily time frame and the weekly time frame. See, we are seeing two different perspectives on the same pair. So first of all, find out what happened and why, and in this way you will be able to change the belief that are presently limiting your success. Until the person now came to my inbox and said, why did you pick a sell? And I said, I'm analyzing the market from the weekly time frame, and the person began to understand my thought process. All right, then secondly, find out what the mistake was, re-examine the situation at all times that led to your loss, and identify the mistake itself. Find out its nature, why it happened, what the conditions were, what you did or did not do. When you follow the system, did you break any rules of your plan? What were you feeling at that point in time? Then you need to search as deep as you can to find the real motive that caused the mistake. Okay, then you also will need to find out about mistakes that have a positive outcome. This can be a little more difficult because you tend to overlook the details of the successful trade. So the questions you should ask yourself when a mistake is made is find out why, what, and where. So most of us, for example, we trade without even using stop losses. All right, that is one of our major mistakes. We do not calculate how much we're supposed to lose at every point in time. We just jump on Euro USD buy, okay, and you feel you're so sure of your analysis that Euro USD is going to buy, and without using a stop loss, and boom, the market starts to sell. You're thinking my analysis is right, and you leave it, and the trade continues to run, and before you know, you are down by 500 pips negative. All right, now instead of you to be angry, you should find out, okay, what did I do wrong? You took the trade without using a stop loss. Then at what point did I analyze? Did I check the fundamentals? What strategy did I use? Have you backtested that strategy over a period of time and come out with the proper analytics to determine your win rates and lose rates? These are some of the questions you should ask yourself. What happened? What were the conditions? Were you even feeling fine? Did you have headache at that time, or your babe don't break your heart? Okay, so these are some of the things, or you've not even eaten, or you're not well rested. You didn't sleep properly, you just wake up, the market is buying, boom. The fear of losing out. Okay, you've forgotten that possibly there's a certain level the market will have to go and retest before before joining the markets. Like, as a person, if I'm not having a proper risk to reward ratio, no matter how good the trade is, I don't take the trade. Like the last trade I dropped on the group, AUCHF buy, they say my stop loss is 25 pips. I'm looking at a 180 pips take profit. That is more than 1:5. Alright, that is more than 1:5 if you check it properly. So if I'm not getting a good risk to reward ratio, I am not taking the trade. These are some of the psychology behind my own trading. Then study the consequences of your mistake. Okay, but the previous article is talked about making positive mistakes. Alright, so sometimes, now all of this is only possible when you keep a journal of your trading activities. It's very important to do that. Maybe when we're talking about money management and trade management, to learn how to keep a journal properly. So just have at the back of your mind that you should, just like the way you update your Facebook, Instagram, or any other social media on TikTok, you should keep a journal of your trading activities while trading. Take a note. If you're saying you're taking 3 trades in a day, once those 3 trades have been taken with properly calculated stop loss and take profits, there is nothing that will make you want to take a second or third or fifth position. Alright, I know some people who trade on Euro USD. There is nothing you will tell them that gold is selling that will make them to sell. Right, that is how you begin to build your trading psychology. Then study the consequences of your mistakes. Make a list of all the consequences of a specific mistake, good or bad. Then also make a list of all the possible lessons that you can learn from what happened. For example, one of the lessons could be that not following the trading system will cause you to lose confidence in it and be out of a winning position when you should be in, or in losing trades when you should be out. Okay, I think that's one major problem. Some of us don't know how to hold trades for long. I know I called on Euro USD since on Wednesday last week, and it's been selling, sold on Thursday, Friday, and it sold today. I still believe it's going to sell to tomorrow until next tomorrow evening, when there will be the interest rate for the dollar. And if that comes out positive, if that is going to come out positive, I see Euro USD dropping some more, and before you know it, Euro USD will have given a target of 500 pips. And you're wondering, why am I not in this trade? Even with the lowest lot size with 0.01, you'll have made $50 on the trade. But because you do not have a cost plan of action, or you don't have a laid down rules, because that is what psychology is all about, following your rules. Alright, and somehow you're not beginning to what? You hold losing trades, and before you know, you quickly get out on winning trades. And you begin to ask yourself, what's the problem? I saw this sell and I didn't hold it. Alright, so the next solution you should be thinking about is implementing an action so that the mistake does not happen again. So how do you do that? You need to change your behavior so that the mistake does not happen again. Every mistake can be changed into a trading success if you thoroughly assimilate it in your mind and action. In this way, you can commit other mistakes, but not this particular one. Like when you now, one solution of being able to hold trades for long is, at the point of entry, calculate your losses. I think it will help you to a very large extent. At the point of entry, calculate every loss. Like the AUCHF posted, for a $1,000 account, you're trading 0.01. You're risking 25 pips. 0.01 is just $2.5, which is less than one. That is actually less than 1% of your account, if you ask me, on a $1,000 account. Okay, meaning if you are trading 0.02, you are risking just $4, which is about 0.4% of your account size. I usually recommend 0.5% for every position when you're risking, because you're risking to make 1.5, 1:4, 1:3, 1:5. So if you're doing 1:5 and risking 4% or 0.5%, it means if you win a trade, you're making 2.5% per trade. That's super awesome. All right, so you have to implement that. Okay, I'm risking $5 on this trade, meaning you now have this rest of mind and assurance that if at all I'm entering AEDCHF and it goes to hit my stop loss, I'm losing only $5. I think it will solve your problem to a very large extent. So your emotions will not be toyed with, and you already know that if I win this trade, I'm making 1:5, 1:3. 1:3 is about $15. I'll make $15 and you'll be comfortable. All right, so the one way is to have a calculated risk for each trade. So as soon as you understand that the result of your trade has nothing to do with a mistake, you'll be opening your mind to hundreds of possibilities, and you'll be able to finally comprehend the very nature that lies behind every apparent mistakes. Taking action properly will lead you to a successful trading career where you never stop learning. The process will be slow but probably repetitive, but your attitude when dealing with mistakes will constantly work at finding out and correcting the situations gradually. Will shape your future as a trader, and most importantly as a human being. Now, the bottom line is learn not to repeat any mistakes. Learn not to repeat any mistake. So if you make a mistake, study the mistake thoroughly, find out why you make the mistake, and draw an action plan on how not to repeat that mistakes. All right, once you're in profit, rule is you have made 100 pips. Why not secure 60 pips or even 70 pips and give it a 30 pips break even? You understand? Never allow a losing trade to go, a winning trade to go in a loss. These are some of the rules that you can state for yourself. We'll talk about that when we go back to trade management. Now, we have different emotions as traders, but they are categorized into majorly two. It could either be positive or a negative emotion, and trust me, be it negative or positive, any kind of emotion can actually interfere in our emotions as traders. All right, no matter how strong you are, okay, as a human being, we all have emotions. Some mentors will tell you that as a trader you have to kill your emotion and that is how you can succeed. No, instead you should learn to use that emotion to your advantage, because having emotion is normal for human condition. So determining how to deal with them so that they do not disturb or represent an obstacle to your trading success is what counts. So we have firstly the negative emotions, which are mainly factors that causes trading failure: fear, greed, failure, self-sabotage, ego, self-destructions. The list is endless. We'll talk about that. As a result, enormous amount of energy are diverted from the normal learning process. All right, a lot of us have fear of failure. I think the most major emotional problem for us Nigerians, I'll pick number one as greed. I think for me, in short, worldwide, 70% of traders fail as a function of greed. Your inability to not take the proper risk. All right, over leveraging of your accounts, taking too much positions, especially social media affecting us. I'll take the South Africans for a case study. They will have $1,000 account, they will enter 50 positions, open all their account. If it goes well, they'll tell you they use $1,000 to make $10,000, and you're not even sure if that's a live account or a demo account. But because somebody has done it on the internet, you want to replicate it, not knowing the number of failed attempts that person has done before he made that video. Alright, I usually tell people most of the time social media is not real life. So we have to get that notion out of our minds and In short, like I always say, that is a trade, a gambling psychology. Like I said, Forex is pure business and you have to treat it as such. There is no way, there is no business in this life that will just give you 1000% in a day. It's not possible. It takes time. All right, it takes time. So now, however, how to handle those emotions is key. I have to be able to handle the emotion, being able to overcome a failure, control oneself, and move the focus to a new trading opportunity are necessary to let go of the past and keep on track with persistence on the path to success. If you are unable to let go of bad trades, disappointment will take over and obstruct little by little any further attempt of entering winning trades. Then we also have positive emotions. Positive emotions can also be very bad. Yeah, they can. One of them is happiness and success, such as when you have closed a successful trade, accomplished a certain goals, or finally solved the problem. When you experience positive emotion, they can enhance your life and uplift you. However, the problem with positive emotion is that it could lead to overconfidence. Yeah, I know what I'm doing. And before you know, you become less and less careful about your trading rules and money management. Okay, you are so excited, you won a lot of trades for the past 2 weeks, you'll be winning, no losses, and boom, you are not careful with the next trade and you lose all your profit, or you're winning too much, that confidence, and the next thing you're like, why am I even being careful? Why am I trading 0.01? Why don't I just enter one lot size and just fight 50 pips, 100 pips, I'll make $1,000 in one day. And that is when, I don't want to say your village people will remember you, okay, and you lose all your profit and it kills your spirit and you begin to think the broker is after your life. No, nobody is after your life. You're after your own life because of your bad psychology. So one major thing that also affects us is stress and confusion. Now, it's not bad to actually read or study, but following too many systems, I come and said mine is the best. You follow Mr. A, Mr. B comes and said mine is the best, and you start doing one thing. You start doing 100 things over and over again, and you become jack of all trade and master of none. If it's only moving average you want to use moving average. It might surprise you that I think I remember one class I taught there is one man, the only thing he taught, it's funny enough, it's something I don't use. He uses Ichimoku Cloud, and immediately I taught that class, he stopped learning, and today that man is still very profitable. Now I could actually say he's the dullest in that class, but he's one of the most profitable traders that I have trained, that he makes a lot of money, and until today, me, I even taught the Ichimoku Cloud. I hate Ichimoku Cloud. I don't use it, but he uses it. You understand? So you have to look for a way in streamlining your style of trading. Sometimes, for me, all I'm saying currently is actually kind of inconsequential when you fail to understand yourself. So the first thing you need to do is to understand yourself. Once you understand yourself, you begin to know the type of trader you will end up becoming. That is one of the most important things. So I might choose to be a long-term trader because as a person, I am very, 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 very patient. Okay, I might be a choleric, but you might be a sanguine who is very impatient. And as a sanguine, you are supposed to be a scalper by default. So you have to learn how to scalp and master the art of scalping. So there are a lot of things that you need to understand yourself that will save you a lot of stress and confusion instead of trying to copy other people. Understanding yourself will help you to build out a style from all you're going to be studying. So there is nothing wrong with studying and absorbing many realistic information about your career as you can, but more importantly is how you are applying all of that information. Successful trader will look only for the most relevant and essential data that can help them to refine their trading system and that can apply to their own psychological traits and personal situations and trading style. Like currently, I'm still working. Now, that's one of the reasons I actually trade on a larger time frame, so that like now I trade on H6. It means I get to check the market only 4 times in a day: 10 a.m. Nigerian time, 4 p.m. Nigerian time, then 10 p.m. again, and 4 a.m. the following morning. Meaning I can actually choose to rest 6 hours as a stretch without looking at the market, and I will be fine, because it takes 6 hours to form one candle on H6 using MetaTrader 5. So you see, now you will not understand why I'm trading. I'm trying to state why I'm trading on the bigger time frame, and you might not understand that. You understand? Now you might have all the time in the world. I was talking to one guy today, and he said he can only trade 1 minute time frame. And we're analyzing the pair together. He was telling me he's a buyer. I said, well, I'm actually at the lowest time frame I can visit, which is the H1, and I'm seeing a sell on that pair. And the guy insisted it was a what buy. I said, I'm not arguing with you. Nothing will make me to go and look at 1 minute charts with you, because I don't have any business with 1 minute. It's for scalpers. I am never a scalper, so I'm not looking for 1 pip or 10 pips. No, I am not. So understand yourself, and it will save you a lot of stress. So how can you use emotion to your advantage? Emotions definitely can be used in a positive way. They are valuable sources of information that can help us in making the right decisions. The goal is not to get rid of them, no, not at all, but rather to learn to control them. So I think one book I would recommend is Why You Think the Way You Think. You can also read up Spirit Controlled Temperament. I think it will help us. But you can just do a quick search on temperament and read the personality traits. I think it will help you to more understand the kind of personality you are, so that you begin to understand how you think and function. But no matter what personality traits you are, whether you're patient or impatient, whether you are easily angered or vexed, you should learn to use them to your advantage. So disappointment or frustration appears when losing. Happiness and excitement arrive when winning. That's established. But it will be extremely difficult not to feel anything or become like a robot. We are not robots. We are humans. So the first step to learn to focus your emotion on your positive trading and life goals, dreams, and projects. When you experience a loss, you should review the trade, then use the fear of making that mistake again to help you get out of a future trade earlier, or plan your exit strategy more carefully. This will be a positive outcome that will help you to succeed in the future. Now, a negative outcome will be using hope to stay in a losing trade in the expectation that the market will reverse. This should be avoided. Negative emotions have a tremendous impact on our mind and body. Okay, so they will affect all your thinking processes and become an obstacle to your trading. There are sometimes, if I really want to analyze, I just put my phone on DND, meaning I don't want to receive any kind of call from anybody. It's very important. You understand? It's very important. You can't be in control all the time. You can't feel you can't feel happy. Okay, negative emotions, like I said, okay, they will affect all your thinking processes and become an obstacle to your trading. You can't feel happy, confident, and peaceful when you're having a negative emotion. You can't be in control either. So emotions can take hold of your mind and lead to wrong assessment or decisions. Accept your losses are part of the business. I think this is one important thing that people fail to understand. There will be losses in the business. You cannot win all the time. But what you should do is learn from them. Try not to repeat the same mistakes in future. Take time off periodically in your daily schedule to relax your mind and body. Go out on hiking, kayaking, go out on swimming. You can go out on running. Or if you're still very strong, go and play football. All right. Or if you're not playing chess, yeah, Scrabble. Take your time and play, and get your mind off the chart. Use the anger of the loss and use to win your game. Okay, in this way, you can take the attention off the negative feelings and turn towards more positive thoughts. So you can act sometimes. If I experience a huge loss, I can choose not to trade for a week and travel, or live where I'm staying, travel to a different town and chill. Then when I come back, I'm opening my laptop a new person. Alright, so as at that moment when the losses happen, especially when the losses are huge, you have to go off the market. Alright, you have to go off the market. I think we've spent 30 minutes already. I don't know if we should do 1 hour or we should continue. But if you want us to continue, just say hi. Just say hi on the chat. If you want us to continue, we should end now. Okay. Some persons are already saying hi. Okay. So we can see if we can do an extra 30 minutes. Rico, do you think we should continue? Okay, we have 3 eyes.
It's almost time, it's already time. So it's just 1 hour because.
Okay, I think okay. Let's just do more 10. Let's just do 10 more minutes there. Let's just continue. Let's continue. Be getting ready for your questions. All right.
So I can ask questions, please.
Okay, go ahead. Ask a question. I think we just go ahead. Let's just do questions. Maybe next section we stopped at. We just know where we stopped. We just continue from there. How to use emotions to your advantage. So go ahead and ask your questions. Go ahead. Okay. Yeah, go ahead. I can hear you.
So the thing is, we have no ascension 3 times in a week. So whatever was up today, tomorrow, Wednesday will start again. But Saturday will be webinar whereby everybody can just come and relate what their challenge or what their strong and then what they can do. So we have 3 times training a week. So I do the rest of the days or remaining two trainers remaining to treat others. Continue this class, but let's just make it just this short, and the next time we can continue for you. But now let's just take the question and answer, and then
okay. I think
today.
Lisa is raising her hand. Okay, Lisa, go ahead, unmute yourself and ask your question. Just raise your hand and I will see it and you can ask. So Lisa, go ahead, unmute yourself and ask. All right, go ahead. We're listening. Go ahead. Okay, another person can go ahead and ask. Or you can type your question if you're finding it difficult to unmute yourself to speak. You can go ahead and type any question that you want to ask.
Hello, can you hear me?
Yeah, I can hear you now. Go ahead, ask your question, Bryson.
Okay, I said, for example, you have trading plan like we have to trade just 3 pairs a day. Let me see, we just have to place 3 trades a day.
Okay.
Then we see another opportunity. Are we supposed to neglect that or wait for other day?
Okay, now the rules is normal trading rule states that if you first of all learn how not to lose, then you will win. So at that point in time, how much of your account size are you risking? Okay, so if your rule is I'm supposed to risk only 5% max for my trading positions in a day, and the 3 trading positions have already hit the 5%, why should you enter the trade again? Just remember, the psychology should be there will always be opportunities in the market every time. If you come tomorrow, there will be opportunity at every point in time. So there is no need to start over leveraging your account. Let's assume all the trades goes wrong, meaning you might end up losing 10%. because you think the trade is so sure and you lose. Now the psychology should be that the market is like an ocean. If you keep fetching it, it will never want to go dry because you cannot empty an ocean. So what you should do is fetch the one you need as at that point in time and come back tomorrow. That should be your psychology about trading. You can never do 100% in a day. The very moment you start doing that, the very moment you target 100% in a day, if you come back tomorrow, trust me, you lose. If you come, in short, if you plan to make 100%, you will lose 100%. If you plan to lose 5%, trust me, you lose only 5%. And trust me, the following day, it becomes a lot easier to recover 5%. If you target 2% loss, if you lose only 2%, trust me, tomorrow you can come back because you have a clear mind and you will now recover even 4% and you end up in profits and your account will grow. Does that make sense? Well, answer your question. Okay, any other question? Okay, any other? You're welcome. Any other question? Just unmute yourself. You can raise your hand. I'll tell you to unmute yourself and ask any question. Okay. Okay, so in the absence,
hello.
Okay, okay, go ahead.
I have one question.
Yeah, go ahead, ask.
Like my issue that I'm facing, like my last week trade. It was kind of perfect, but I was having this issue of placing after taking first take profit, putting my stop loss to entry. The next thing, the market will just take me out. I can still have my trade first if it is, then the market will bounce again to take me off. The other
Are you in the Telegram? Are you in our Telegram channel? Brighton, are you in our Telegram channel?
No, I recently joined this.
Okay. Now what you would do is you can be dropping your trades, your trading signal on the discussion group, and I will help you reanalyze them. Is that okay? I can help you comment if it is good or bad.
Basically, I do make it. Okay. Basically, I do use 4 hours for my structure, then wait for 30 minutes and 15 minutes.
No problem. No problem. I can tell you if the trade is right or wrong from my own opinion. You can decide to take it or still not to take it. Let's try and do that this week and see how your results will go. Let's engage the group more. All right, you're actually free to comment and drop your own trades.
Wow. That's nice.
Yeah.
Nice, that's nice.
Just comment on the discussion and I'll attend to it.
Thank you so much.
No, you're welcome. Okay, since there's no other question, so I think if we can be doing this, let's try. Once we say 7 o'clock, we are traders. Once we say 7 o'clock for the webinar, let's be here by 7 so that by 8 we're out of here. We'll spend our full 1 hour instead of waiting for everybody to join before other persons will come and join. Okay. All right. It was a nice time.
I'm very happy.
It was a nice time. I'm looking forward to the next section so that we'll learn more. Okay. Do have a wonderful evening for the rest of your day.
Okay. Can you hear me?
Yeah. Go ahead.
Hello?
Yeah, we can hear you. Go ahead.